Welcome to the July 29, 2024 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. This is about a 7.5% gain for the S&P 500 so far this year. Now the S&P 500, in part powered by tech, is about 14%, but something happened this month extremely important. By the way, I'm Spencer McGowan, President, McGowan Group Wealth Management, team of 10, serving affluent families right here from the Crescent in Dallas. What a week it was, actually 2 weeks. So the Nasdaq index peaked on July 10th, and then profit-taking ensued for the Magnificent Seven tech stocks, and you'll recognize them as we go through. But in 2 weeks, now the Nasdaq is up 13% for the year. S&P pulled ahead. Historic proportions movement in these stocks. Okay, so it was a rotation of historic significance. Because the tech stocks started to falter, that pulled the Nasdaq down with it. Look at these. A 14% decline here for Alphabet, Google. Wow, they said they're going to spend a lot on the AI build out. Meta, Facebook down 15% in 2 weeks. 19% decline for Nvidia. Wow, a shot across the bow if you're too much tech. Tesla 19%. They had a 46% drop in profits from last year, and of course investors reacted quickly. The rotation sent money into other places. Small cap stocks are now up 10% for the year. The Nasdaq, by the way, Nasdaq 100 up 13%. But the shift into small stocks, regional banks, home builders actually, and others, it was money broadening out from the tech in rapid fashion. S&P 500 earnings growth. Last week we reported it was about 9%. This week, 6.5%. So some of those tech earnings did come in down like Tesla, but still sporting a gain for the 500 companies. We've got 206 reporting out of 500. So we want to keep updating this every week. That's why you should subscribe to your financial weatherman, Spencer McGowan, so that you can see the slope of the curve when it comes to how are companies really doing versus last year. And this says that's okay. But for the small stocks, I got a huge warning. This is terrible for the Russell 2000. Now, only 364 out of 2,000 have reported. But if this trend continues, it is bad. Minus 17%. As it turns out, you can divide the Russell 2000 into companies that are terrible and companies that are good. And the good ones, well, we'll try to separate those in future reports. Now here, just wanted to cover something that's on the Apple Podcast. So go to Apple Podcast, Net Worth Radio, it'll come right up. And my father got all spun up about taxes, then regulation. Now we're going to get to waste, but just to remind you for this weekend's podcast, and of course, you can get that at WBAP and KLIF over the weekends. But look at this, or just go to networthradio.com. The broadcast is right there. All right, so this is inflation going from 1% to 13%. Wow. These are the federal regulations growing 5-fold over 20 years. Wage price controls under Nixon, they just made up all kinds of new rules, and the Federal Register of Regulations grew 5-fold, and inflation went from 1 to 13. That seems to be a pretty direct correlation. Reagan comes into office, cuts Federal Register nearly in half, and inflation goes back to 1%. Wow, maybe there's correlation. You can see gradually rising. This is 2017. They cut them again. Inflation stayed low. And then, of course, you had the pandemic and a spike in inflation as the economy got restarted. We'll see what it looks like from here, but on pace to reach a record number of regulations which is correlated with shortages and, of course, inflation. That is explored further with my dad on the podcast this weekend. Thank you for tuning in. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.